Welcome to Group Coaching. This is Cedar with Market Mastermind Trading Group, and we're going to cover the VMC or VuManChu oscillator indicator, which is a free indicator from TradingView today. I started out trading in 2002, and the first indicators I was introduced to were MACD, MACD, and Stochastics, and I used them really successfully for quite a while. About 15 years. And I'm always looking for, is there something that will give me a little faster indication of what's going on? And so I eventually came across this indicator that is a rewrite of an indicator package that actually costs $1,500 and is sold by an individual. Can't remember the name of it even, but it's the Cipher. This is the VMC Cipher with B divergences that is free from TradingView. You do have to have you can't use it with the free subscription with TradingView, so you will have to have above the basic membership. However, if you're trading, it's a cost of doing business to pay at least the minimum tier level, I would say, to be able to add community indicators because there are so many great ones available. So we're going to go from the ground up as far as adding this. So I have a chart that I've got everything turned off that I would typically have on, and we're going to go to indicators and type in VU, VuManChu, and mine is favorited already, so it pulls up quicker to the top of the line. But you're looking for the Cipher B plus divergences, one click, so you only add it one time, and it'll show up down here at the bottom of your screen. So it's going to come defaulted with some different, in fact, I'm going to make this taller, a lot more noise on the chart than what you're seeing on mine. So I'm going to walk through how we're going to set all of these up. That way you have it. And I actually have recorded video in the tools section as well, if you just need a really quick recap on the setups. But I want to quickly run through what they are here for our purposes, especially if I can get the indicator to, no. Do need to make sure my video's okay. Yeah. Well, it's not giving me settings, so we're going to try that again. There we go. Oh, I do have to leave that open. Okay. So starting from the top, we have everything selected. The default is everything. I turn off the fast WT wave trend because it creates just some extra noise in there that for me makes it harder to read. There are some there's 3 full-length videos that I use to come up with what this is, if you want to spend the extra time to watch them. So other people using it successfully recorded them, and as I came across them, I was like, oh, this is even more useful. And so I'm just going to run through what those are. All these numbers stay the same for the default. We want the WT regular divergences on. If I turn them off, that takes away these lines right here. So this is a divergence indicator. So this peak on the oscillator is higher than this peak where price is moving up. So it's identifying those divergences. The hidden divergence, there's nothing showing right now, but I go ahead and leave those on. And I do not want to apply the OB and OS limits to the hidden divergences. So I have all of those selected. Numbers stay the same through here. We've got show MiFi on. I turn off RSI. I'm going to go ahead and click it on so you can see what that looks like. It is essentially watching the RSI line in relation to this white line. All I care about really is the white line. for this purpose because it is less noise, and less noise is better. This indicator became much more useful to me after I cleaned it up just a little bit. So I don't want to see any of the RSI divergences. I don't want to see stochastic RSI. I did leave that one on for a while, but it pretty much shadows what's happening in the individual waves. So I went ahead and turned it off. I don't use logarithmic on it, and I don't care about K and D, and not interested in divergences because we're not using stochastics. Where is the, okay, so no SOMI flag, no SOMI wave. All these numbers are the same. I do use the SOMI diamond as higher confluence, higher, it's more serious if I see that. And those are the changes. Everything inside of style is exactly the same. And like I said, there's a very quick recap just of a screen capture of what these settings are. If you ever need to go back to them, you don't have to rewatch the whole video. So go ahead and take you into, so these diamonds here and here are the SOMI diamonds. So they add a little extra belief for me, or confluence, outside of what the actual indicator does. So I typically don't keep this indicator this tall. I usually keep it as like a fifth of the chart, but so that it's easier to see relative to the chart, I think we'll leave it like this. So as an introduction to this concept, if you think about an MACD, which almost everybody's familiar with MACD, you would have green and then red, right? So somewhere at the peak of it, it would switch over from green bars building up to red bars coming down, and then back to green bars building up. When you get underneath, it's red bars until you get to the peak, and then it's green bars. So really similar from that perspective. It's still a histogram. The difference for me, what I found in using this indicator side by side, and I actually used it side by side before taking off MACD because I'd used MACD successfully for so long, side by side for 6 months to see, is this reliable? And when I finally switched, it was because I saw the switch indication, which let's use this particular oscillation, one full candle earlier than MACD. MACD would be switching from red to green. The switch with the dots, or with the change of the thickness of this light blue edge, was giving me one full candle heads up on a 30-minute time frame, and on a daily time frame a lot of times, ahead of what MACD was telling me. So I felt like it gave me a little bit extra edge over what I was using before. So let's go into what the components of this chart are. We know that these are the divergences. So we don't have to, we're using those as a heads up that there could be a difference in momentum versus what's happening in the candles. And I left those off for a really long time. So if they're distracting to you, if you feel like they're making you second guess yourself, taking them off won't hurt anything. I'm going to start with this center line. This is the 0 line. And you see a green, and then I'm going to look left and see some more stuff, and some red that kind of floats above and below. That's your money flow line. That is how money is moving on the particular product. And I chose ES just because we trade ES so much inside the group. But every chart that I've tested this on that has a reasonable amount of volume, so not low float, penny stocks, things like that, but large cap, well, or very liquid, it's worth looking at it and back testing it and see it for you, because obviously just because it works for me doesn't mean it's going to work for everyone. And that's as it is with everything in trading. You want to test it and make sure that for you it actually improves your edge. If it doesn't improve your edge, just because it improves mine doesn't mean it will improve yours. So I think of these like if you're out surfing, the height of the wave needs to be a good wave, right? You watch the sets rolling in and you see small, small, medium, large, or whatever the pattern is. So I'm looking for waves that come up to the white line or down to the white line primarily. Over is even better, but up to them, similar to what you would have with a stochastic crossover or cross under. And what I need to see is that over green money flow. Now let me back up. Let's start with long positions. So if I've got green money flow, it's kind of thin here, but I've got it. I'm looking for a green dot, which is considered a buy signal. A green dot under green money flow gives me the greatest chance to come up if we cross the 0 money flow line and we stay red, to actually come up and test the other end of that white line range. So your white line range, I'm going to use the ruler tool just so it's easy to see the white line range in there from top to bottom. Not quite the same as a stochastic, but I use it in a similar pattern. So entry signal would be green dot under green money flow. If I'm looking for shorts, this isn't a particularly good example, although we've run up so much recently. We're going to go ahead and use it because this is the best short indication so far that we've gotten as far as this indicator is a red dot over red money flow. But because it's not anywhere near the white line, I'm thinking if we can get under the 0, I'm going to sell as soon as we're approaching the white line on the other side. We're using a daily time frame, so this is a really big, like you could look at this more from a swing perspective, although I'm not swinging right now. I think market is so volatile where we see a trend day up and then a trend day down back-to-back days, which is very unusual. But as we move into more smooth kind of market action, so red dot over red money flow, as soon as this starts to slow, and we've got slow time frame and fast time frame. So think about this as the faster time frame, the light blue, and then the medium blue is actually a combination. You can't really see it. Let me look on my screen and see if, I guess you can see a little bit. It's a dark blue kind of frosting on this edge. I think of that as the hollow side of the wave. So if we've got the wave cresting, there's the hollow side of the wave. Wave cresting, hollow side of the wave. But I don't see it super well in the way I have this set up. It isn't a very useful thing to me. The pale blue or the lighter blue is what I'm really interested in. So let's take this down to a 30-minute time frame. And dig a little bit deeper into this. So when we have a green dot under red money flow, we can expect that there is potentially not as good of a bounce. Now, let me qualify something here. I taught this a couple years ago, and somebody that watched that particular video took it to be, this is your buy and sell entries. I want to clarify that this is absolutely not a primary entry trigger. We're going to use this as confluence behind what we have with our other methodologies on the chart, and then confirm with the VMC indicator. So looking back at it to see what items have played out, we want to see what happens when there's green under green money flow, what happens when there's red over red money flow. So do we sell off? What do we do? So here's a good example. I've got green under red money flow. While we did see a pop, if we look at the candles up here, and I'll probably do that. While we did see a little bit of a pop, even though it looks big on the wave, the price action wasn't real significant around it, right? It wasn't a very big move, as opposed to and actually I need to turn on this is not showing me extended hours. I'm going to switch over charts, take off my drawings. Because the context of where a lot of this is happening, like I want to see primarily inside RTH because the volume is much better in regular trading hours. So if I have an indication that something's happening in extended trading hours, I'm less likely to jump on it unless everything else is in alignment. Okay. So here's an example actually of it not working well. We've got a red dot over green money flow, but the money flow is coming down. That's the only indication here. This red dot came with a SOMI diamond on our sell candle of our RTH open yesterday. And then we get a green dot under green money flow that didn't bounce super well. So this would have been considered a weak indication for me of a short, which is why I was not short. Not all why. Primary reason I wasn't short is because it's very typical to, when you have a trend day up, not see a trend day down following it, to see consolidation and kind of range bound trading. The bounce off of this would have been a very small bounce, even though it was green under green money flow. So this is an example of it not working as well. So even though there was confluence along with what we were seeing on the charts for other areas, it was not as effective. But here's a good example. We've got green dot under green money flow, and it's not quite, we were at the white line, not quite at the white line, but when we were back here, there were two areas of selling money flow or red money flow around it, which made me less comfortable. So green dot, green money flow. And if we just follow along in price action until we see a thinning of the blue, so you can think of that as icing or the crest of a wave. So as the wave comes up and starts to break over, I'm considering getting out somewhere in that range because I don't want to wait for it to retrace. So paying attention to the thinning of the blue, and I would have for sure been out as soon as a red dot started to render because of this candle, to be concerned. Now, this did continue on. So if you close it and want to take a re-entry, and you're considering the re-entry, the green dot would provide confirmation for that. In this instance, the green dot rendered as a final render. It'll start to render in the candle for all of them. However, that move, you would have missed that move. So you would have taken your profits out at 54.94, green dot renders, and you're back in at 59.09, which is a 15-point spread. But it was confirmation that we were going to potentially see some movement up. And it's funny because these ranges look so, these candles look so small, but if we got in at 59.09 and got out as this red dot rendered, it's 55.22. So it's still a 10-point move, even though it looks tiny on the candles because of the ranges we've been seeing. So here's a good example of not having VuManChu being as useful. We're wavering, we're just hanging above. And I was actually having a problem with the way that this indicator was, how it was being viewed on all my devices during this particular day. It actually looked like a whole bunch of just dots right underneath this dotted line, just red and green dots. So I had to actually delete the indicator and re-add it. So I always save what those settings are. And just in case you're not familiar with that, let me go ahead and go in and show you that save as default. So down in the bottom corner, once I change it, then I'm going to click save as default. And I forgot to mention that earlier in the video, because sometimes you have to re-add it and it's Some are easy, like you can go into anchored VWAP and change it back to single standard deviations instead of the half, you know, the little bit of tweaks that we make. It takes a little more time to reset this one back up, but it was immediately right. I just knew that I had never seen it not have waves. It looked like this with a plateau top all the way across here for, I don't know, 10 hours or something like that. It was, I don't know what was happening, if they changed something in the back end of the settings, but being familiar with it definitely helped. So looking at some examples of red dots over red money flow, we've got a red dot rendered. And of course, I'm kind of watching the oscillator here to see the thinning near the white line and considering going short. The short entry here on the render of this candle, if we entered at the start of the next 30-minute candle at 2:30 p.m. last Thursday, red over red money flow, then my exit, I honestly, looking at the candles, wouldn't have even waited for that. So looking at these candles, as soon as I saw this second candle not selling off, not continuing down below this wick low, I would have exited based on the price action. But for sure, when I see this thin, the pale blue thin, and go into that green dot, I would be out, which would have cost me 54.51. That's 10 points, right? So the move from the top of this candle after we have confirmation to where, based on candles, I would have been concerned about getting out. If you're trading pure price action, then it's a 62-point move. So for me, I am after levels, I'm after some other things besides just the pure price action. But it could be as simple as this with anchored VWAP if you want to clear some air. So some more examples. Green dot under green money flow. That's a shorter trade. A couple of hours though. This was back when we were upset because we were only trading normal ranges. So green dot, open to the next candle. That one's 33 points. This would have been about a 15 or 18 point for me because of this red candle that rendered right here. So we're using it as secondary confluence. I would have been happy to have been out of it before that red rendered on the top, even though we weren't at the crest of that wave. So when you're looking at it from a zoomed out perspective, the SOMI diamonds, so the pink diamonds above the money flow line and the green diamonds, which there's a few, lots of above the money flow line because we've been in this set. I think are we on our third week of going to have a weekly red candle? I believe we are. So this SOMI diamond helps me believe this red dot that normally I wouldn't, because it's nowhere near this white money flow line. This gives me a little better feeling for what could potentially happen if I'm thinking short. So let's see if there's anything else in here. If you're not careful, you end up only seeing this kind of range, and that's where it's, you know, hard to have it super small. I do that on the stream because I don't want to take up, I want to primarily be focused on the candles, but every once in a while you'll see me zoom it out because I want to see what's happening with the SOMI diamonds. So good example, green under green money flow. Zoom in. And there was a little red blip in there, very interesting, but it was before green dot rendered, money flow went green. and we went from 56.33 to the end of that run 56.44, so another 11-point move. Then you've got a back test. If a green dot renders above the white line, above a green money flow, I can take that as a re-entry long when we're not in a downtrend overall market on the higher time frame. So this is where this part gets confusing. Over the white line, a new green dot over green money flow is the only time I would go long from this indicator's perspective. And of course, we have all the other things turned off on the rest of the chart, but just I want to keep reminding you that this is a confluence indicator. Your primary should be volume, which is anchored VWAP, the SVP, the volume profiles, and the previous 2 days price action, as far as price structure go, be your primary directives as far as entering. So I'm going to go check in Market Talk and see if we have any questions. If you guys have any questions, please post them. And I think having been familiar with MACD, it was a really easy transition for me. And I've seen that with a lot of people using it. But if you have questions, make sure you're asking them. It doesn't have to just be during the group coaching sessions. You can shoot me a DM or tag me in Market Talk. So we'll go to price action right now. Since it's a happy Friday afternoon, we've got a green dot under red money flow. So that's an indication that we didn't expect a very big bounce there. And we didn't get it. Now we're seeing some consolidation. So the expectation is if it's the opposite color under or over. So if it's green dot under red money flow, expecting a smaller move. If it's a red dot over green money flow, expecting a smaller move. Not always. So it's not an absolute, nothing is an absolute, and all indicators are lagging. All of them. However, I found that this one is one candle ahead, especially on the 5-minute charts. I only keep my 5-minute 10 MA protocol chart up without an oscillator on it, but you might find that it fits your style. I have a lot of coaching clients who actually love the VuManChu on the 5-minute time frame. So I'm not seeing any questions. I'll go ahead and wrap this video up and post it in the group coaching section for those that have missed it. And I will catch you guys in live trading shortly.